Hello and welcome back to my channel. I'm going to go through a few things in this video. I'm going to kind of go through my process that I carry out at the weekend. I'm going to check out the results on my bot for the week. I'm going to check out the news for the upcoming week and also look over some technicals for a mixture of markets, including some of the Forex major pairs and also some of the major index markets as well, so that we can get prepared for the week. And it'll be great to hear from you in the comments if my analysis matches yours, or if you've got any questions, feel free to let me know them below. It's been quite a week for me this past week. My eldest son has just started school, so I've gone through a bit of an emotional roller coaster. So I've not done too much manual trading this past week. I have kind of been focusing on my children, but I've been letting the bots run in the background, so I am super excited to see how that's played out. You might also be able to tell I've got a bit of a cold. Naturally, children are back to school and the colds are going around. So if I sound bungled, that's what that is. So all the software that I am using, my broker, IC Markets, my prop account with the 5%ers, my charting software with TradingView, it's all linked below in the description if you want to check that out. Please remember to like and subscribe to the channel. I'm going to start things off here by just checking out the results on my bot for the week. So if you've missed my videos, I have created a trading bot. It's not completed yet. I'm in the testing and refining stage, but if you want to check out the whole process, I will include a link above. It's really interesting. I'm doing it completely for free. I'm not using a programmer. I'm doing it myself with the assistance of AI. Specifically ChatGPT. Although this past week I've also dabbled with some other AI. I've been using DeepSeek and I've been looking up some coding specific AIs as well to help solve those pesky errors that I can't seem to get past. So this is a $10,000 account that I started. It's a demo account with IC Markets. I'm using a demo because obviously we are developing a bot. I'm not going to do that with real money. But I'm curious, if I just go into my account history here for the past week of the 8th of September and see this past week, it's made $1,160. So 11%, which is a really nice return on the week. What I want to know, the most important question for me is, will this repeat? It's all very well making this much money in 1 week. And you might notice I don't even seem super excited, and that's because I have played with bots a lot in my time and I have learned to not get super excited because next week I might lose more than that. So I'm just kind of keeping my calm with it, keeping my cool. It's a very exciting start. It's really good. This past week has been the first week that I have managed to solve errors, so it's been an accurate test, and that's a very good start. But I'd like this to run for at least another 3 weeks and create profitable results so that I can see some consistency building. Only then will I consider moving to a live account. But of course, that's a very good start. I'd be very surprised if it keeps up, because that would be over 40% in a month, which is quite unlikely, to be honest, given my experience trading. But if I spend the next 2 weeks losing and then the 4th week winning and even just make 10% in a month, that's brilliant. So let's see how that goes. I'm still in the process of translating the code to work from MetaTrader 4 to MetaTrader 5. It's taking some time. Errors, coding problems, it all takes time. Right now, I'm going to hop onto forexfactory.com. This is a brilliant free platform, if you don't use it already, where you can check out any upcoming news events that are scheduled specifically for trading Forex. It can also affect other markets, and I like to just have a look at the calendar here to see what is scheduled for next week to help me to get an indication of where the volume might be at which market. I just clicked onto my calendar here. I do have this filtered on the major impact news because the minor impact news doesn't tend to affect the market movement as much, and the major currencies are selected here. Now, this was the previous week, and it's quite interesting to note that it was a very quiet week. There wasn't much news scheduled, and this can just indicate that slow start back with the volume. The children are going back to school. Everybody's kind of getting back into the markets. If we skip this into the following week, the week commencing the 15th of September, we can see we've got a lot more news scheduled, and this can indicate that there's going to be a lot more volume coming into the charts, and hopefully that may bring some interesting trading opportunities. So looking at this together, on Monday, we've got a bank holiday for the Japanese yen. So any Japanese yen pairs may be a little bit quieter. We do have some news scheduled for the dollar and for the euro. I'm kind of more interested in the red flag because that's the high impact news, but I do still like to see what the medium impact news is, just in case there's nothing else scheduled that day, as there isn't on the Monday, because it still may be worth waiting until that news release for the dollar at 1:30 GMT before getting into a trade. On the Tuesday, there is some pound news in the morning, and the major news will be the Canadian dollar CPI, Consumer Price Index. And that's due out at 1:30 in the afternoon GMT. I'm based here in the UK. There's also core retail sales for the dollar. So these two are pretty major news events that happen. And this can mean that obviously US dollar and Canadian dollar pairs may see a lot more volume in the afternoon on Tuesday. I certainly won't be trading any of those pairs before that news is released because obviously the news will affect the movement of the market. Moving on into Wednesday, there's a big news release for pound in the morning, CPI. Again, that's a major news release. There's more major news for the Canadian dollar in the afternoon, scattered throughout, and it's federal funds rate and also FOMC for the dollar Wednesday evening. FOMC is scheduled 8 times a year, and when it does happen, it can mean that that day the market tends to be choppy. So in my experience, I have traded the dollar during the day and probably most of the time lost the trade because it's just been really choppy and unpredictable. And so I've learned that when these news releases are due out, I tend to just not trade that day for that pair. But that's my preference. Thursday, there's some Australian dollar news during the Asian session, so that may affect Australian pairs. There's more pound news due out as well at 12, and the US dollar's usual weekly unemployment claims in the afternoon. You may notice that I don't actually go too much into what the news is. You can read about it here, and it does give you a forecast on the figures. So if the unemployment claims is 245, and it will say here, if it is actual, is less than the forecast, it's good for the currency. But from my experience, news is catalyst. I'm not really bothered about what the news is, just that there is that news event being released, because I know that that will impact the markets and make it go either up or down. So I tend to wait a couple of minutes after a news release to see where the dust has settled, how the market is, and then make a decision from there. And then on the Friday, we do have some yen news, which doesn't come out very often, so that will be interesting. More pound news and Canadian. So it seems to be very pound, dollar, Canadian, Australian focused this week. So if you usually trade any of those pairs, just keep an eye out. It may be a little bit choppy. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Now that we've gained an idea on the news events that are due out next week, let's focus now on the technicals side of trading. I'm going to go through some different markets together, and I'm going to do some top-down analysis, mainly starting on the weekly, just to see how it ended last week, the daily, and then a faster time frame as well, just to kind of set some key levels to watch and get an idea on what the market may be doing next week. Starting with pound dollar. First thing I noticed on pound dollar is last week we had a bullish close. It was a small bullish candlestick, but it closed above the high of the previous week. which means the price is pushing up. The fact that it's small to me just shows that it's because the market volume is low. In fact, if we look back over the August period during the summer holidays, it hasn't really done much. We've just been in this period of consolidation. We got a large wick rejection down here, rejecting these lows, and price has been gradually pushing up. So I would see this as a slow bullish progression. Plus the fact that we are in a bullish market long term on pound dollar. We had the significant key level, a pullback. The key level was broken here, and we kind of made this little pattern. But price didn't break this structure with its bodies. It closed above it, making a double bottom pattern. And it looks like it may be resuming this overall push phase. Of course, there's always the chance that there will be a false break and we'll have a candlestick here and a drop below. But for me, I tend to follow the trend until there is a clear sign that it's reversing. So now drop into the daily, which is just an extension of the weekly. We can see that very similar pattern, this key level from the weekly. The price is still trading above. And zooming in on the daily candlesticks for last week, very, very low volume. We didn't really get that much, just this continuation pattern here, pushing up ever so slightly, breaking above the previous daily high. The fact that Friday's close was slightly bearish, we kind of pulled back a little bit, means that I'll be more cautious to trade this market on Monday. I'd like to see a close and a break above the previous daily's candlestick. And here's the same information now. Last week's data on the 15-minute time frame. That's the time frame that I like to use for my trade planning, my trade entry. I would class myself as a day trader. I do sometimes hold overnight if it's looking to be in my favor, but I tend to like to reduce my risk exposure by getting in and out on the same day. Now, this is quite interesting, and it's why I like dropping to the 15-minute, because you do get a little bit more information. Let's look at the key points. So last week's low was down here, and the high was here. Now, we've not broken above this high. And using the Fibonacci retracement tool from the low of the week and dropping it at this high point, we have these three areas of optimum trade entry. Now, I will highlight them there with this box so I can make my charts tidier. But they are the 62%, 70%, and 79% levels. Price did come down here and it created this nice pattern. It found some strength and it surged up, but we didn't break and close above the high of the week. Which means that when next week opens, the fact that we had that slightly bearish candlestick from Friday may indicate it needs a little bit more pullback. So there could be a chance that price may dip down and find more strength from this area. See how there was a lot of volume, a lot of movement here. There'll be orders sitting here. So I would probably expect that during the open, we may get a drop down before a rise up. Weekly and daily time frames, I'm still bullish, so I wouldn't be looking to short this market. But I would be interested in looking here, maybe for an entry at this point, with a stop below here and a break of high target. That would be my rough game plan for the start of next week for pound dollar. Seeing as there is a lot of news coming out next week relating to the US dollar and the Canadian dollar, I'm going to go over the technical charts for USDCAD. Now, I don't trade this pair very often, and I don't remember the last time I looked at this on a macro perspective, looking at the larger time frames. So it would be kind of interesting to have a look at what it's been up to. So here is the weekly time frame for USDCAD, and I'm kind of focusing on this area. This is quite interesting because we're coming up. I have this key weekly level drawn because we got a tap here. We got a tap here, and see how the bodies are closing perfectly below this level, and a tap there. That's 3 wick rejections, gradually pushing up, creating momentum, a pressure cooker to blast through this key level, which we got. But then we got this really strong bearish engulfing candlestick, and after we got that, that's kind of created this change in behavior. We slid down and we got a huge bearish candlestick back down. Price closed back below this key level. It pushed up here, another bearish engulfing candlestick down, larger than the bullish. So we broke out of this weekly level and we seem to be rejecting it. And the bears are taking over. We're kind of curving back up here, a couple of wick rejections here. Now this is on the weekly time frame. Nothing happens fast on the weekly time frame. In fact, this started back in October 2022, so that's been going on for some time. But for me, reading this alone would look to be that we are more bearish on USDCAD. And what I mainly look at on the weekly time frame is the previous weekly candlestick close, which was a very, very small amount of volume. It's a small bullish doji. A doji candlestick means indecision, so the bulls have tried to pop up. But again, we've got this wick rejection at this key weekly level. Looking at this in more detail on the daily time frame, I've just highlighted last week's range candlesticks from the Monday here. We opened with a drop down, we pushed up, we got on Thursday a bearish candlestick with this wick rejection, rejecting that weekly level. If I had seen this and I was looking at this from a swing perspective, that would have been a really nice place to go short with a stop above this level. Obviously this would slip into the realms of swing trading, but that is something that I would definitely be considering based on that pattern if you are a swing trader. And if price pushes back up to retest this level, that's what I would be considering doing. So I'm going to set a little alert there. But let's look at this on the faster time frame from a day trading perspective. These are last week's candlesticks on the 15-minute time frame. And again, I like to look at some of those key positions, those key levels. So we've got the last week's weekly open here. We have a low here. And then price made a high. I go for this one because this one made a low that got broken. So we'll go for this high and this low. We'll ignore the clutter in between, just looking at the most obvious points. And this is a low because we broke above this high here. It made a little one here and a little pullback there. Let's just mark those. This is very basic market structure, but it's so helpful in determining who is in control, the bears or the bulls. All you have to do is read market structure in this way. And what I am learning from this is the higher low. This one up here is the higher high. The moment that this higher low gets violated, so price will push down, breaking and closing below this key level, which we got here, that is when you experience a change in behavior, a CIB. And in this case, where it goes from the bulls being in control to the bears. This happened on the Thursday. So to begin with, we sort of had this nice uptrend last week. We came to this weekly level, and let's just zoom in on this candlestick pattern here. Can you see how at this blue line, the weekly level that we drew, we pushed above it, we got a bearish candlestick down, we pushed above it again, and then we dropped down. That's a really nice classic double top pattern at a key level. So these are some really nice patterns. It's a shame I missed them last week, but again, I was a bit distracted. But they're really nice patterns that would confirm a trade entry. Now, of course, it's likely that there would be a retest to this level. This candlestick alone has created a fair value gap. So if price comes to this level around here, that could be a nice place to get in short for a retest of this confirmation pattern. But moving on with the market structure, so we came down, we closed below this and made a new little structure here with a little pullback there and a low here. Now, price seems to have pulled back there, and what I'm interested in looking at is from the Fibonacci retracement tool. It closes above the OTE, but it doesn't close above this structure, which means that that could be another area to consider to get in for a short, looking for another double top pattern. But I always prefer to go with the higher up entry to provide a better trade placement in terms of stops and targets. It'll be interesting to see how this technical analysis matches with the fundamentals. Once we get those major news releases next week for USDCAD, it might be that Monday, Tuesday, Wednesday for USDCAD, especially because we've got FOMC coming out Wednesday evening, it might be that we get a very gradual, slow start to the week, which would work out really nicely with these technicals if the start of the week we're kind of doing something like this. And then if the news is released, we may get a very choppy candlestick. And it just really depends what that news is. And that's why I have to wait for the dust to settle. But if it's enough to come back up to this level and trigger me in, that would be pretty good. And what I like to do is just indicate on my platform here whether I'm looking at a long biased or short biased. So for USDCAD, I'm short biased. For pound dollar, I am long biased. And I'd like to look at some index markets now. So let's have a little look at SPX500. Complete macro perspective here. Weekly time frame, zoomed out all the way from 2008 to present moment. And it's such a nice chart, such a nice uptrend here. But let's zoom in on the most recent price action. So we are at all-time highs with SPX500, and last week's candlestick closed very bullish, making a new high. There are many ways that you can trade SPX500, and it's easy for me to want to slip into looking at this from an investment point of view, where I would be looking for a drop down to these levels and purchase down here. But for this video, I'm analysing this more from a day trading perspective. If you prefer to swing trade or long-term trade, then what I'm about to talk about might not relate to you specifically. But I've been trading this, especially with my automated trading bot, just basically following the trend, and it's been working really well. And I can see why. Because last week we have just been pushing up, making new highs, breaking the previous daily high, which is really nice for a trend-based trader. If you watch my videos, you'll know that I prefer to use clean, clear price action for manual trading without the use of indicators. However, for my automated trading bot, I have been utilizing an indicator because that's pretty much how automated trading bots work. They rely on indicators and data. But you don't really need an indicator to see how this has been in a really nice uptrend. So from last week, we have just been making higher highs and higher lows, higher highs and higher lows. Push up here. And the big question for SPX500 for day traders, I guess, will be whether this trend will continue pushing on up, or whether we're going to see a slower week where we're going to get some consolidation. In fact, with the news that's due out for the dollar with FOMC, it is quite likely that we may get just that. The start of the week, we may just start to see a slow breakdown. And then depending on the news, it's whether these levels here are going to hold. Because these levels can provide nice entries. See this big wick rejection here? This could be a good place. If price dips down, it could trigger some buy orders and we might see some volume push up as the week progresses. Alternatively, if the news is weak for the dollar, then we might just break through those entirely and get a deeper pullback. So I will set an alert at these levels here because it can be very easy, especially for my lifestyle. Got 2 children, 2 preschoolers, and I'm pregnant, so life gets pretty hectic. And that's why trade alerts are so useful. I can set an alert at an area where it looks interesting. And why have I done it here? Because this level here is the previous higher low. This is quite an important structural point. If this gets broken, that will be a change in behavior. And from here, using my Fibonacci retracement tool, I kind of know just from eyesight really that would be the optimum trade entry. In fact, my alert is perfectly in the middle of the optimum trade entry level. And the added confluence for this is this huge wick rejection here that we got. That's very nice. It shows there's a lot of orders here for buyers. So I would have an alert sitting there and I would be interested in being a buyer at this level if the news confirms it. I feel like this video is starting to get quite long now, so I may just do one more market. I have to have a quick look at gold. I've not looked at gold for a while. It's very similar to the SPX500. We've been in this beautiful uptrend, brilliant for any long-term investors who got long at the bottom or any trend-based traders who like to just trade that strong trend. And last week we got another bullish candlestick. Now, I think it's quite interesting to note that the week before was a very strong bullish candlestick, and last week's was still a bullish candlestick, but it was smaller and we have a large upper wick, which shows some rejection, which means that we may be losing a little bit of strength to the upside and it may be getting ready to pull back. Let's look at the daily time frame for some more information. Gold had been in quite a large consolidation from April. I'm going to just look at kind of these bodies here and draw the range of this consolidation. So we got a break above on the 1st of September. It may be the start of the volume coming back in after the summer holidays. But last week, if we just focus on last week, Monday opened with a strong push up. But then Tuesday, we got a very bearish candlestick. That's a bearish pin bar. We have a small body and a very large upper wick rejecting the highs. So price had opened, it dropped down, it gone all the way up and come all the way back down again. It's really weak. We got another bullish candlestick up, another bearish one. But it looks like it's almost making a double top pattern. In fact, if we drop to the 15-minute time frame, on the Tuesday of last week, that bearish engulfing candlestick we have here is very interesting, dropping from the highs, and price seems to be retesting this level a couple of times and not yet breaking it. But if in doubt, I always like to start at the basics and look at market structure. So let's do that again. Price opened at this level here, and pretty much from the open we have just been moving up. We have a gap slide here where it's making lots and lots of higher highs and higher lows with a strong push up and a new high forming here, a new low here, a new high and a new low. Then we had that high forming, and that candlestick, this one right here, is a very big bullish, bearish engulfing candlestick. Just zoom in on that. There's a lot of volume there, a lot of rejection of those levels. It reminds me of the USDCAD one, but gold usually tends to trade in a relationship with Australian dollar. So when we get the major news release for Australian dollar next week, that might impact the movement of gold. Now, after that new high last week, we had quite a drop down. We broke this low, and we made a new low down here on the Wednesday. Price then pushed up here, didn't break this high. It came down here, which broke this low. And then we pushed back up here. But it's about level with this high. So you could in fact say that because we've broken these structural points and made some new lows, we pushed up, we didn't break the high of the week. And this is almost like a double top pattern. My only caution with getting in for a short with gold is the fact that it is in this established uptrend, and I like to see some very clear signs before taking reversal trades. I'm a cautious reversal trader. I prefer to trade the trend because it just tends to be easier. But if you are a trader who trades gold, who day trades gold, that's probably what I would be looking at, what I'd be maybe interested in or cautious of if you were still long biased, is that we may be at a turning point for gold. If you are fairly new to trading and you want to learn some more about a lot of the techniques I've talked about in this video, or maybe even some of the foundations, my ebook Forex Trading 101 is a beginner's guide for trading Forex, so you might want to check that out. There's a link below in the description. Meanwhile, if you've enjoyed this video, do let me know by hitting that like button. I don't tend to make too many weekly outlook videos, although I do enjoy doing them, and they are amazing preparation to get your mindset focused for the week ahead and also to be prepared, help avoid any of those emotional, irrational trades. So if you enjoy this style of video, let me know in the comments below and I'll know to make more. Thank you so much for watching, and I'll catch you in my next video. Have a great week. Bye.